Good morning. It's Impact Live Money in the Morning, and we are live.
We are live. Good morning, everybody. It is January 17th in Texas and Louisiana. We really appreciate you guys turning in as well as worldwide as we are having a really great time doing such a fun show. Money in the Morning, Impact Live, Money in the Morning. How are things in Ireland there, David?
Yeah, it's fantastic. Ireland's the most upbeat place. The will of the people. They're strong. They're resilient, and I've never seen such vast farms in my life. They are a farming culture. They they survive on the island for centuries and centuries. So they got it down packed, man. Healthy cows, healthy horses, healthy people.
That is interesting, huh? So you see all the farmers in Germany, they're protesting. Is there any talk about that?
Well, the only thing they don't like, a lot of them, is the some sort of pesticide regime that's trying to come in and take away from the natural process. But it's not at the point where it's being forced, and so we don't see the protests yet, as in Germany.
Don't see the protests yet, as in Germany. And I think here in the U.S., of course, we have, we have all this stuff. We do everything. We do the pesticides, and we do, all of this stuff that we have going on. So I had a nice pump yesterday on the Bitcoin markets, and then kind of pull back to where it was.
That's what we go for, that volatility, right?
It's the volatility. I'm sure some people got kind of trapped in that too, as well. So we have, of course, Matt. It will be on here in a few minutes, and then as well at the half hour, we're going to bring in, or a little bit right after the half hour, we're going to bring in Weingartner, Henry Weingartner, which is
awesome.
He's using as well astrology.
Yeah, I mean, this is the hand of time almost in the astrology.
So he was selling it. He shorted Bitcoin at 48, and he's got his, it's supposed to hit at either a summit 42 and summit 40. So pretty interesting. So that's going to be pretty interesting. But yeah, nice pump up and then pull back, and then that really hit the alts as well. Now, if we start to look at some of the other markets here as I'm talking, I'll just
Ethereum, I think, had a run there.
Ethereum has been holding on pretty well. It's that whole rumor and the news thing. So everyone's like, all right, we're gonna have this is my tab here. We're going to have an ETF, right? And so everybody's excited about the ETF. And so Ethereum is pumping. And let's face it, the all-time high on Ethereum, I think, is 5,000. It's about half of that. It should gain more than Bitcoin this time around, I would think. They're now reducing the supply. Of course, that is a totally controllable asset. So that is approved by all the governments in the world. They can seize it, freeze it, take it by court order. And so that's what they like. So they want you to have your money in Ethereum and not Bitcoin in general. It doesn't mean that you shouldn't have some there, but that's what they like. So you can see on the futures here, we're down about 150 points. That's kind of how we went in. Yeah, there we go. Top of the morning. Yes. Nah, I think you're out in California, right? You're still up, right? Aren't you still up? Just lady. So we'll see, of course, how the day plays out. But with the dollar strengthening so much, and you can see as I was just looking kind of around on the Asian markets here, world hit by rate cut pushbacks, dollar shines, Asian stocks hit by that's the big talk. The Hong Kong tumbles. Yeah, as the dollar, and I'm sure Matt will talk more about it, but as the dollar gets stronger, of course, the different markets and crypto and commodities and everything like that. So here you can see everything across the board is just down, everything down. Shanghai, the Nikkei, and I don't know if you noticed, but on the last screen I had, they said that the Nikkei was actually up. So it must have pumped up and then came down. But you see, look at these percentages here, pretty 2%, 3, almost 4% on the HSI. And the Nikkei actually holding the best, only down a little bit there. Yeah, so, and then you see the US dollar on the Japanese is up, on the euro is up as well. Now, the Japan is kind of an interesting situation because the Bank of Japan should have gone insolvent a long time ago, and that's actually one of the things that Henry's going to talk about is how the markets react differently now than they used to, because we don't really have true markets. Our markets are very much manipulated by the different countries. So pretty interesting. Let's look at oil. Oil down as well, 2% down across the board. Of course, you have a lot of world factors. Natural gas down 3.5%. That is considerable. That is considerable. Now, of course, you have, of course, everything that we normally have going on in the world, right? All the madness. You have our leaders over there in the WEF, the World Economic Forum, and they're meeting and they're talking to each other and, doing all these things that they do. Of course, Blinken comes out and says we need a two-state solution. And of course, I think you got to have people have to be able to represent themselves. But it's kind of funny the way who knows what he actually wants. But that's what he's supposed to say, I guess. So that's what he said. We need a two-state solution. So of course everybody's upset. And you got the Houthis still doing their deal over there. The Red Sea. Another company, I think Shell Oil, stopped their shipments to through the Red Sea.
Yeah, this is a high traffic zone, so we're gonna see what type of supply chains and weapons shortages start to happen.
It's going to be pretty interesting. I mean, we're not over here, Costco, I think was the first one. I'm sure there's a lot of other ones that haven't made the news that I noticed, but Costco was the first one that I noticed. They stopped shipments, I think, into Israel, but going through the Red Sea. Then you had natural gas, one that I talked about yesterday, stopping their shipments through there. That's going to, everything's going to make prices. The reason they go through the Red Sea is because that is the cheapest and shortest way to go. And so if they have to go other ways, or if they can't do it at all, then their prices are going to rise. And of course, now you have Shell Oil not going through the Red Sea. I think it's probably a pretty good move if to not do there. I mean, considering that they're just sending missiles to the different places. I think obviously we're big supporters of peace. I think that we're going to have peace at a certain point, and it's like Elon Musk says with the whole Ukraine and the Russia war before we got to this point. So we're still gonna have the same result. It's just going to be the amount of people that are dead, and so we always need to push to bring people to the table to talk peace, and that's the deal. That's what we support. So pretty interesting stuff that we have, of course, going on here. Vivek joined the trail. Did you see that?
No, tell me.
Vivek, this guy, he's slick. He's slick. he's slick, man. He's slick. Here he is. Let me just load this up. This is him last night with the Trump man.
I think he's gonna aim for the VP.
Of course, he's going to aim for the BP, which, I mean, Trump's going to run with whoever he's going to run with. But I mean, really, I'm going to have Vivek be the VP. I mean, come on, guys. But I mean, that's just me. I feel like let's have some guy that's, I would support Giuliani. And I know people say, oh, he's old, this, that, the other. But I mean, that's what we need. I would support that. I would support. How about Colonel McGregor, General Flynn? I don't know. How about some of these guys? We don't need it. Trump's already a slick talker. We don't need another slick talker here.
Let's do this, guys. It's good to see you. It's good to be back to New Hampshire. We miss you guys. We're going to make this happen, and you guys know this well. You know this man. You know why we're here. Patriots across the state. We are in the middle of a war in this country. That's what this is. It's not a war between black and white. It's not between Democrat and Republican, even in a deeper sense. It's between the permanent state and the everyday citizen. Between those of us who love the United States of America and a fringe minority who hates this country and what we stand for. And right now we need a commander-in-chief who will lead us to victory in this war. That's what we need in this country.
So I'm going to keep that tab here. I'm going to drop in. This is Putin yesterday. Just to...
Совершенно очевидно. Не только провалился их контрнаступление, но инициатива полностью находится в руках российских вооруженных. Если так будет дальше продолжаться,
this continues, the Ukrainian statehood could be dealt an irreparable, very serious blow.
Невосполнимый, очень серьезный удар.
So I don't know what he's threatening, nuclear war or what. I don't think he use nukes, but I think that he's definitely not kidding. Unfortunately. So yeah, those are some of the things that are playing in. As I mentioned yesterday, I don't think that the powers that be really want Trump in office, and if Trump continues to win, I do think the markets will continue to slide overall. But we'll see. We have a lot going on. Let's bring in Matt and see what he has to say. Will it affect Costco here in the U.S. too? Not yet, but I feel like they're gonna get us sooner or later. I mean, they're not just gonna keep bombing everywhere else and not us. You know what I mean? They're gonna hit us. They're gonna hit us soon. Sir Matt.
Welcome, Matt.
How are you, sir?
Oh. You can see my Dennis Taylor glasses. Probably you guys don't know Dennis Taylor.
No, we don't.
British snooker player. He used to have these crazy big glasses that helped him see on the snooker table, but he actually became world champion using these crazy glasses. So
we can see you clearer now.
Well, I left my glasses at home, so I found this pair, which they work.
That's
anyway.
Funny.
Yeah.
Cool.
So,
you look great.
It'll help me see the charts better today, so we can give some direction. But we've been seeing them pretty clearly. Let's just have a look. There's been some interesting stuff go on today. So we will have a look at the Grayscale Bitcoin Trust, what's been happening since, what's been happening with the Bitcoin price. So let's just see the entire screen. So hopefully you can see my screen. And
it's loading.
Yeah, and if I move over, I'll just put this onto full screen. I'm hoping it's loading or loaded.
There you go.
Fantastic. This is the old Grayscale Bitcoin Trust was basically an over-the-counter vehicle, which basically means it wasn't listed on a major stock exchange, etc. And it's just high net worth individuals that were able to trade the asset. And what's interesting with these trusts is they're actually shares that hold. They're a company basically that has shares, and the company can hold underlying assets. So in this case, it's holding Bitcoin as the underlying asset. But the shares themselves, so you have a company, which is business, is effectively holding the shares, the underlying shares. So in this case, it was holding Bitcoin. But the actual price of those shares is dependent upon supply and demand of those shares themselves. So it doesn't necessarily, and it doesn't always reflect the underlying value of the assets, in this case, Bitcoin. And so for a long time, they were trading at a discount to the net asset value, in this case, as I say, Bitcoin. So what's interesting is, I think from January 2023, it was trading at a massive discount. The shares were trading at a discount to the underlying assets. And so I think some of these big investors saw a massive opportunity here, and there was more and more demand for those shares, which drove the share price higher, and it eliminated the discount that they're trading at. So you can see a massive discount here, 40%, over 40%, 50% to the actual underlying asset. So they saw a major opportunity, and they're buying into this Grayscale Trust and diminishing that discount. So even right up until the approval of the ETF, there was a discount available. So that is why we saw an initial sell-off within the Grayscale Bitcoin ETF. There was an initial sell-off there because they were trading at a discount, and there's obviously a lot of profit taking. But that discount is now being completely eliminated, really. And it just means that hopefully the worst of the sell-off has been seen. And you notice there were 11 approvals, and there's only one that saw a net selling, basically, which was the Grayscale. And all the others saw net buying. So that's what caused, I think, the sell-off, and what caused effectively the the buy the rumor, sell the news effect that did actually happen. But interestingly, it looks as though we're possibly, although as I say, there's mixed signals here, we're possibly this Super Golden Cross is probably telling us of longer term upside. So we've got a wave 3 here, which was precisely or almost exactly 1.618 times the wave 1. So after the pullback, which can't go into the territory of this wave 1, so it can't go that much lower, we should see a further push to the upside. So that's long-term positive. Short-term, potentially this chart is actually beginning to look a little bit negative short-term, and we warned of that yesterday. So what's happening in the world that's potentially driving assets? Well, we just had this shock news out of the UK about inflation actually rose to 4%. That is twice the target rate for the central bank. So whilst we were hoping and waiting for this reduction in interest rates, we're not going to get it as soon as we expected, because inflation is already ticking higher, and that was driven by we're looking at even core, which excludes food and energy, which they're the things that people spend on. So even the core inflation rate is much higher than people are expecting. So with inflation rate running way above target rates, they're not going to be able to lower rates, and we'll just look at those expectations. But what happens, why are we so worried about the economy? Because when the economy is in recession, it means people don't have money to allocate to risk assets like Bitcoin, but to investments, to spending, whatever. And that's what happens with recession. Nobody's spending money, and everyone's tightening the purse strings, etc. But just look at this. This is really interesting stuff. This is using bond inversions, difference between the 2-year and the 10-year yield. And it's just showing how predictive it is for recession. So going back to the 80s, we saw basically the inversion happening, and it was basically happened and was at its maximum long before the recession took place. So 6 months before, a year to it's basically around 6 months normally before, and we got recession. It happened again here. Again, we got the maximum inversion, then sometime later the recession hits. Again here, maximum inversion, sometime later the recession hits. And again here, we had recession hit. And now we've got and that was maximum inversion there. So again, we've seen maximum inversion of the yield curve. So we are expecting, because this is what happens, this is just economic fundamental stuff, it's what happens. So we are expecting recession to come sometime April to June 2024. But we know that it's election year. They're going to do all they can to prevent it. They want to print money, but they can't print money if inflation is sky high. So this is the spanner in the works, because inflation is being driven partly by oil prices. And as you've rightly said, there's lots of tensions in the world with the Houthis and with Iran and the Iran proxies and Russia. We just saw Putin. You played a video there. Potential troubles there. So this is why they've really got their hands tied. And I've gone over this kind of material over and over again, because it's what's important. It's what is going to drive asset prices. And here we're seeing the expectations for the Fed, what they're expecting with interest rates. And they're expecting, so in March, there's a 67% chance here. They're expecting easing of interest rates in March. That's not going to happen. They're not going to be able to do it. I'm sure they're not going to be able to do it, because inflation is too high. So how can they reduce interest rates? They've got a 95% chance of easing rates in May of this year. But again, they're probably not going to be able to do it. And then you got June, 99% chance. Are they going to be able to do it? So they want to do it because it's election year. They want to stimulate an economy which is beginning to face headwinds, but they can't do it when inflation is higher than it should be. And this is what we posted. And we showed this in advance that we expected that probably be a break above this parallel channel, which is exactly what's happened. This is what's pressuring, but it all ties together beautifully because we expected a bit of a pullback on Bitcoin with this ETF approval, the buy the rumor, sell the news. Weren't quite sure what was going to happen, but it was supported by this break higher that we've seen in dollar index. And this is obviously inversely correlated. It goes in the opposite direction to Bitcoin and risk assets. And so I'm expecting probably there'll be a bit of a bouncing about, but probably even a little bit higher. But then if we start to see weakness in the economy, it's going to mean potentially weakness in the dollar. And that's when we see potentially dollar start to weaken. And the US economy has been the strong one in the world. It's been the one that's been resilient. We've had amazing employment figures out of the US. But if that starts to weaken, then the dynamic will change and money will start to flow out of US dollar into other currencies, which, yes, they've been hard hit compared with the US dollar. But if money starts to flow from US dollar into other currencies, then we'll see basically monetary easing. So that is, some way or another, we know that they control, they manipulate, you've said it over and over again, they manipulate what's going on in the economy. So one way or another, because it's election year and because they don't want to see us head to recession this year, they're going to keep putting back this recession by somehow easing monetary policy, which means the US dollar is going to weaken. And it means at some point we'll get a real final pump in risk assets, Bitcoin, crypto, etc. So what I'm saying is short term, we're under pressure, but longer term, because it's an election year, I know there have been years where it's not happened, but I think they're going to do all they possibly can to stimulate the economy and get it moving. And then just finally, one of our favorites, and then we'll perhaps discuss around what's going on in the world and what's going on with the economy. But I mentioned a few episodes ago about XRP, and there's a ChatGPT prediction using a jailbreak scenario where they can basically get around some of the safety protocols and get it to predict prices, future prices. So if we get the pump, this is one potential wave count for XRP where potentially the previous all-time high was potentially wave 1. Then we've had an A, B, C down in wave 2. Then we're potentially getting what's called a leading diagonal, smaller wave 1, then we'll get small wave 2, etc., pushing up. So the big wave 3 would potentially take us to a minimum 1.618 times this wave 1. So you measure wave 1 from the start to the high point, just transpose that same movement to the start of wave 2, and then 1.618 would normally be a minimum expectation for wave 3. That takes you to $3.29 on XRP. And that gets you into the realms of what was predicted by ChatGPT. So wow. I'm just trying to align those. I'm not saying this is definitely the count. There are no guarantees in trading. There are probabilities. And it's just that ChatGPT that's what it said their prediction was. And it actually aligns reasonably well because ChatGPT was talking about a target of around $3.50 for XRP. So I'm just saying it's a possibility. And with these technicals, if we interpret them this way, it can actually, potentially give us that. So I do think that whilst we're going to have some choppy times in the investment world and the crypto world, with the fact that we've got these crypto ETFs now, well, a Bitcoin ETF, and there's probably others to follow, and the fact that we're going to get monetary easing because it's election year, potential for a massive pump. So whilst if we get up here, we're going to get a pullback again before it pumps. I'm just saying I think there's a real potential for a massive pump in the future, and we need to be just aware of the probabilities and be aligned accordingly. So interesting stuff, I think.
Yeah, for sure it is. I do think that XRP will probably hit those numbers. I think, you know, they are professionals, as we always say. So there's nothing that is guaranteed, and they pretty much have, you know, they have a so-called set supply, but they can mint more if they want, and that's in their protocol. So there's a lot out there. Now there's a lot of money behind them too, but I do think they'll probably hit that. But they, you know, they're funny. They'll drag everyone along for a while. But that is an interesting chart. That's roughly what 8x from here.
Yeah, it's amazing. Mm-hmm. Yeah. So yeah, it's quite interesting about the ETF, the dynamics there, wasn't it, around Grayscale, because they were an investment trust, and you're looking at people converting, and you know it was running at a massive discount. So there's some smart investors there, weren't there, who basically got into that early whilst it was at a big discount. It basically meant we got exposure to Bitcoin at a discount. And as that discount evaporated, as we approached the ETF approval, they made a lot of money. So no wonder there's going to be some profit taking. I mean, that's amazing. Just shows the smart guys, you know, they know what's going on behind the scenes, don't they?
And they're making the money. That's right. That's the deal. So because that's a nice profit. I mean, they bought at a 40% discount, and then had the normal run up, right? Because it was at a discount of the normal price, if I remember correctly.
That's right. I mean, that is the way they normally work. And the reason for it is the dynamics between basically supply and demand. And normally with these ETFs, because they're just over the counter and they're just basically available to professional investors, there's a lot less demand. They're not listed on a major stock exchange or anything like that. And so there's a lot less demand. And that's why they tend to trade, these shares trade at a discount, because there isn't that much demand for them. But clearly demand massively ballooned as we approached ETF approval date. And then that's the chart that we showed, that the discount was effectively evaporated. And if it hadn't, it would have potentially caused some real price fluctuations when ETF approval came. But that's why once it happened, the discount had already disappeared, and so there wasn't such a fluctuation in price. Otherwise, there might well have been potentially people selling massively. But yeah, it's been a very very even run basically, and not been what people expected with either an explosion or a crash in crypto prices. Yes, there's been a correction just because of profit taking, but you know, we wish, you know, we need to follow these things because there are opportunities for other people. Many people can qualify as a professional investor, by the way, and you could have potentially bought into Grayscale whilst it's such a massive discount. And there's only 1 or 2 or 3 these kind of life-changing opportunities for us as ordinary people, or relatively ordinary people, where you can make a lot of money in a short period of time. And one of those opportunities for me was back in 2008. You know, with the financial crash, and you know there were many warning signs that could alert you to it. Another one was when the Swiss franc crashed out of the exchange rate. Effectively, it was a fixed exchange rate, effectively supported by the European Central Bank, and that was one which again you could see in advance, and it was basically a very, very low risk trade. So risk reward was massively in your favor, and these are the kind of once in a lifetime, or maybe 2, 3, 4 times in a lifetime opportunities that you need to be on the lookout. So you need to have an understanding of the macroeconomics, or if you haven't got time to do it, you need to follow people who do it. Follow the news, follow these kind of shows, follow ourselves with eVay.io. And again, it's not as though every day there's major opportunities, but eVay actually, for example, we actually predicted before it happened the crash in Luna. So again, you could have shorted that, or you could have got out and protected your winnings. When I say winnings, you know, your profits or whatever. Same with FTX. We actually downgraded FTX 3 times before it actually crashed. So warning signs are there, and if you've got the technology to do it, as we have with using the latest AI machine learning technology, you can avoid crashes, or you can profit from crashes. You can make money, and you can protect the money you've made. So there are opportunities, but you need to, as I say, either do the research yourself, or if you don't have the time or resources to do it, then look at genuine people who do that research.
Amazing. Well, it's always interesting, right? It is, and like you said with this, and like we've talked about so much with this election year, they're going to do everything that they can, and I think the way you summarize that is exactly right. They're going to kind of keep that pressure on, as much as possible, and then it's going to kind of pop because they're going to print so much money that to try to save everything, and then at a certain point, that's going to really turn. So I think we go to a commercial break on our Texas station here. Let me just peer over here. They have it automated now, and so it's a little hard to keep track of.
Well, while you're looking for your commercial break, just very quickly, it's interesting how all the major leaders around the world are all coordinated, and you'd be surprised the level of coordination. And I think they are actually managing the oil price at the moment. So I do think that Saudi in particular will, because they want to keep the world economy on an even keel, and also that they are kind of, very much tied in with what goes on with America and the demand there. They'll want to keep oil prices under control. So they'll basically pump more oil if necessary, because it's just amazing. How is the oil price at this level with so much geopolitical tension going on in the world? Amazing.
It really is, isn't it? That is something you see it down today and you're like, what is going on, right? I don't get it. And I think you're absolutely correct. They're going to try to keep that down. It's a huge, when you go and fill up your car, it can be, $20 difference on filling up your cars, whether it's, $60 or $80 or 80 or 100 or something like that. And that, you feel that. That's something that the normal person will feel. So that's a good point. Let me just look here. I think they're still kind of working out the stuff. While we're doing that, let's bring Henry on for a second to say hi before we say
hello.
Bye to Matt. How are you, Henry?
Hello, Henry.
Waking up, thank you. It's a little earlier than I'm used to.
It's 6:30 on the East Coast. You're a New York boy, though. You're used to this stuff.
I get up at 5:30. My cats get me up, but basically, we're not usually talking. Let's put it that way.
Well, awesome. We're really looking forward to getting going. We'll lead it here in about a minute officially.
Sure.
Matt, it's always a pleasure to have you on here. I know things are going really well with eVay, and we're looking forward to developments of that. How is the token holding up? Not to put you on the spot. I know you had
we had an amazing day yesterday, about a 30% pump, and it's actually held up since then. We've got some major updates coming out, major releases. We're looking at major collaborations with some big institutions, all sorts of positive stuff. So we've been building during that bear market we told you about, and the results of that, the foundation that we built, you'll begin to see the fruits of all those labors coming out in coming weeks and months, I believe.
Amazing. Okay, well, we will see you tomorrow. Really appreciate it.
Big time. Sir, thank you, Matthew.
Thank you. Been a pleasure as usual. Yeah, have a good day, and bye for now.
Bye for now. All right, I'm going to lead in here with Biden saying that he is the only one that can beat.
It's kind of funny. All these Republican candidates in the primary trying to beat Donald Trump. I'm still the only person to ever beat Donald Trump. And I'm looking forward to do it again for the good of this country.
Not to get political, but it does affect the markets. I feel like it affects the market. So we have joining us here, this is Henry Weingarten. He is world renowned. I did a little bit of research on him, of course, before I reached out. He's well known for his predictions in the markets. How are you doing, sir?
We're doing well, thank you. Certainly, we're never bored when we play the markets.
It's never boring.
Right. People sometimes say, why don't you go to Las Vegas to do gambling? I said, I don't need that. It's too tame.
That's what I tell people all the time, too. They wanted me to gamble. I say, gamble? Man, I trade. That's gambling enough.
Exactly. You know, earlier you were talking about oil, and of course, for the first half of the year, we're basically buying oil on every dip. When you talk about how strange it is, which we agree, because for both fundamental and astrological reasons, it should be a little stronger than it is. But you have to remember that markets can do anything. I'm sure you remember when oil was minus $30, $35, I think.
Yes.
I really wanted to get some, and unfortunately, I didn't have like 20 million available so I could pick up a tanker. But when you see things like that happen, pardon me?
That is what they were going for.
Right. But, you know, so the markets can do anything they want, especially with computerization today. So lots to talk about. And it was very interesting to see a thing with Biden, because one of our forecasts last year was about Biden, unfortunately, being very sick, and somewhat surprising that he's able to run. And he may not be. You know, there's a lot of speculation near the end of this thing. So when people ask me who's going to win the election, I would like to know who's running, because it may not be exactly
right.
It may not be the people that they're thinking of. Let's just leave it at that way at this point.
You know, it feels weird. I will say that on both sides.
Yes,
it really does. It feels weird. I've you know, without. I mean, I'm a Trump guy. I've always been a Trump guy. But you know, be that as it may, it feels weird on both sides, and I don't know what that means.
It means you have to be very attentive, and but let's talk a little bit about the market, because politics we could get off on the side.
I know. Let's do it. So just to give you guys a little bit of background as well. So Henry uses a lot of different things to predict the market, and one of them is astrology. So yeah, go ahead and.
Well, one of the things I want to say is that as of last Friday, we're on a yellow alert, which till the end of the month. And what yellow alert means, which we only do 3-4 times a year, or red alert, which could be either, is to be extremely cautious. It's a good place if you wanted to be short the market, but leaving trading aside, it's really a time you have to look at safety. There are a lot of fundamental reasons, I'm sure you can argue, why things are overvalued, or why the economy is not in great shape, whether we're in a recession or just feels like a recession. The point is, from a viewpoint of a trading, it's very likely the market will be going down from last Friday till the end of the month. Now, not every day, but there are a number of what we call red days. And it's a time that you want to see that you have either some cash in your account, you write some calls, you sell some stock you think is problematic, put in stops, whatever. So it's a time to be cautious from Friday until really February 1st. So that's the first thing. And we don't say that often.
Interesting.
But there's a lot we can talk about. So what would you like to, I'm open.
Okay, so I'm opening up here. We have your thing here. We have common mistakes on the markets. I thought it was pretty interesting. This what we talked about yesterday on the how things are different. Why don't we go over that? You want me to share the screen?
Yeah, I think it'd be easier, because I always have a little bit of problems on that.
I understand. I'm normally shared in the tab, but it wouldn't do it how I normally do it. But I got this now.
Yeah, the markets are very different from what you read in textbooks and what you learn in school. That's for sure. You want to bring it up, or I can just
I'll bring
talking?
it up. I got you. I got you here, I think.
Okay, perfect. All right. Well, the first thing I think that's very interesting, and this is for all students of astrology or anyone who makes forecasts, is that the markets are very different than they were last century. The first and most important pivotal time is 1971. And when I mention that, often people say, oh, in 1971, the US went off the gold standard. And of course, that was very significant for currency traders. But what was more significant from my viewpoint is it was the era of fixed options. And what that meant was, if you were bearish prior to 1971, you would sell your stocks. Whereas post 1971, you could hold your stocks and buy puts. And if you bought puts, the market makers would sell you puts and then in a sense start moving up the market. So it set up a sort of dichotomy that was a sort of a yin-yang situation. And so the market started to react differently. The second is 1987. And in 1987, we of course had the crash. And two things happened. One was we had circuit breakers, so the markets could just not continuously drop. And then we also had the Working Group on Financial Markets, also known as the Plunge Protection Scheme, which we tend to believe is acting much more actively than they did in the past. And so if we see what happened, for example, last year in the financial crisis, or when the October 7th tragedy happened in Israel, markets did not behave as you might have expected because there were some counter forces. So that's the first thing. The second thing that's extremely important is the role of human beings is becoming less important. We used to, for example, I was a CTA in the 80s, and we would sort of measure the traders going back and forth in the pits. You could see it from the lunar cycles, et cetera. But computers do not have emotions. So because of computers, algorithms, and passive managers, there's again a difference in the way markets react. And we could talk about, if you go to my next slide.
Next slide. I just got my producer just messaged in. He says, this guy is world class.
Thank you. Okay, now this goes with the oil thing. The first thing is the lack of reality. We're all trained, or at least I was trained, that the markets would sort of predict the economics 6 months in advance. That's nonsense. For example, remember we had negative bond yields. They charged you for owning bonds. And remember when oil prices were negative. Or we could talk about when natural gas was $10, and then the next year it's $2. That is not a natural response. So there's less and less reality. It's not reflecting reality. It's an input, but it's not the input it used to be. The second major difference is in retail investors. Previously, they were less than 10%, which means that the market professionals, the hedge fund managers, those were the guys running the markets. But now, with meme investing, et cetera, we also have a new influence that we did not have before. We have $7 trillion in EFT and index investing. And what does that mean? That means you have a lot of good stocks that can be sold because someone's selling the broad market, or conversely, somebody could be buying a piece of junk if it's in that particular ETF. That tends to moderate how you trade individual stocks. And of course, computer domination, because in active markets, over 90% of what happens is all done by computers very quickly. And we all know on an active day with things going up and down like yo-yos. So this is, again, very different than, say, when I was starting in the 80s and 90s.
Yeah, absolutely. It's massive. And it's a totally different market.
It's a different game. Right. And then there's one more thing that's changed very recently.
Okay.
Now, one more. There we go.
Okay.
The breaking of the rules. If I had told anyone last year when the UBS situation in Switzerland that shareholders would be paid in full, but bondholders would take a haircut, you wouldn't believe it. Because the reason anyone becomes a bondholder is for safety. And if there's a problem, they're the first ones paid. Fortunately, everybody in Europe said, no, that's never going to happen again. Everybody in the United States said no, because if it had, otherwise, nobody would ever buy a bond. That was a total change of the rules. Then we have the bank crisis, which we predicted, by the way. The thing is, all of a sudden, everyone's covered. You were only supposed to be covered for $250,000. And yet now, if you had $50 million, you're covered. Now, clearly, the markets would have dropped 20% or more. But still, that's a change of the rules. That wasn't happening before. And then the next thing, which is just beginning now, is AI. You know, with your chat, people, instead of buying or even using their algos, they're letting ChatGPT do the work for them. Now, it's still very early on. We don't fully know the influence, but that's definitely going to have an influence as well. So the markets are very different, which is why always you have to operate from whatever your strength is and whatever your ability is. But it's not what you're reading in textbooks, except in a very long-term way. So that's one of the differences.
Yeah, I mean, that's very interesting. So tell me, we just went to a commercial break on our network, and then we'll pull back in about 2 minutes. What are some of the most famous predictions that you've made?
We could take the next 45 minutes for that, but let's start with the first one. When we came into the markets in 1987, we knew about the 1987 crash a year in advance to the day. It wasn't my work. So what I did was I basically determined when the Tokyo market crash would take place in 1990, and I figured it out about 2 years in advance. I was off about 2-3 days. We had that one correct. We did the first U.S. Mideast war. 2 years in advance, we were off 4 hours. We did most Mexican crises. We did a lot of Bitcoin predictions. As a matter of fact, we went short on Bitcoin Thursday at 48K, which wasn't a bad one, 9 out of 10 times, which isn't bad. But there's so many more. You'd have to go to my website, afund.com, and just go look on it. It's just, we stopped tracking it. We do a lot. In fact, every year we do forecasts with 5 major forecasts, 3.5 to 4 are usually right, sometimes 5. And you should take a look at our 2004 forecast or 2003, which covered, quite frankly, unfortunately, the bank crisis and what happened with Israel indirectly. Okay, but we have lots of predictions, and you can go check them out. But what's important is not what you did in the past; it's what can you do in the future. Because
that's right. That's right. And so you can go to afund.com. Is that right? afund.com.
Right. Or Henry Weingarten, our YouTube account as well, which is Henry Weingarten, the Astrologers Fund, and you can see our forecast. Okay, this is the 4 things we have to look at in general for the markets. These are the big known unknowns. Okay, the first is whether the Fed is going to lower the rates. Excuse me 1 second, they're just passing some coffee in the room. I'm in the Cornell Club in New York.
No problem. This is live television. That's the way it works. Okay.
Now, basically, I always like to say, I know what the Fed should do, but not always what they will do. So I have to admit, it's not my best thing. We don't believe they're going to lower it in March. We do think in May they will, for a number of reasons. One of which is, of course, we do have sticky inflation, as well as the fact of underreporting it. So that's one issue, which every day the market says, oh, they're going to raise it, they're going to lower it, blah, blah, blah. But I think May is the more likely. May and September are what we're betting on. The second is the results of the Ukraine and Israeli wars. And from our viewpoint, for example, it's a lost cause. I want to talk about the tragedy on both sides because it's both are horrendous situations on a human scale. Agreed. But obviously, we believe from a military viewpoint, it's a done deal. Russia has won, and nobody in their sane mind would a country of 40 million attack a superpower of 240. I'm not saying they attacked, which they didn't, obviously, but that might be by the spring some changes. Hopefully, a ceasefire, somewhat perhaps like North-South Korea, which is what I would do, and just freeze the lines. But that's a big thing. Now, the part that is very critical is what's going on in the dollar alternatives. Because while the dollar is strong, which it is currently now, the market's going down. But should the dollar become weak, then conversely, the markets, excuse me, please. Conversely, the market will go up because in a sense, stocks can be positive for inflation or owning it in the same way that gold is. So the dollar thing, I don't think there's going to be a total connection, but it does make a big difference that more and more trades are going outside the dollar into currency. It will never be fully, but that is inflationary for the U.S. And of course, the presidential election, lots of things are happening there. So these are issues that will constantly come back and forth that you have to look at almost on a daily basis. And by the way, when we trade these days, we recommend either being super short-term, intraday, and maybe overnight, or long-term, looking 6 months to 2 years out, because the intermediate term, the markets are going boop, 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 like that. So if you're a trader, you've got to either be super short or an investor, much longer time frame if you want to be sane.
That makes a lot of sense to me, for sure. Being as a trader, I don't trade as much as I used to because of those reasons.
Yeah, you have to do it all the time. I'm the same way as you are. Now, we're basically the part, and again, this is from our 2024 on our YouTube, we're basically bearish for this quarter. In the first 10 days, we had a decision to make, which was we were short in some positions here, and of course, we were short the bonds, which did nicely. We basically had to make a decision that if in the first 10 days the markets didn't go down, we would be long short, because I could not comfortably just be long the market given my fundamental views. And when we trade, we do technicals in astrology. When we invest, we do fundamentals in astrology. So basically, we're on a bearish stance. It doesn't mean we sell all our stocks or anything, but we're doing a certain amount of day trading and we're doing a certain amount of defensiveness. And, we have this insanity that no one's paying attention to what's going on. And that's because let's say the government or people have come in to constantly support the markets. But there's a lot of scary stuff out there. And there often is a lot of scary things. I mean, every year you can say there are 10 things that can go wrong, but sometimes it's worse. And this is some of the times it's worse, which is why we're on yellow alert. And we would definitely suggest caution, review your portfolio. Again, do you really want to have what you own? If you're owning because you think other people are doing it and there's a bigger fool theory, at least put stops in. Okay. Now, this is interesting here because as we know, the market really wasn't up so much. It was primarily a Magnificent Seven. And if you look at history, you could lose 40% on it. And what we did, of the Magnificent Seven, we chose two, which were Apple and Tesla. And this is pure fundamentals, had nothing to do with astrology. I didn't have time to look at it. And I said, get rid of those two or reduce it because those two are going down. And you can see already from our forecast that both of those are in trouble. So that was already a very profitable trade, but whatever you want to call it, because they're all of them are way, way overvalued, but the market is determining winners and losers. And you can see a lot of stocks from last year that were high flyers that are losing. And then you see like the AI ones that are jumping up. So those are two I'd be very wary of on a short to intermediate term basis, not necessarily on a long-term basis. Okay, I'm a gold guy.
Me too.
So I know you guys like it. And I want to talk a little bit about how gold works in the marketplace because it's a very interesting situation. The first is it's the cheapest geopolitical crisis insurance out there. So that's number one. Number two is, and this is very critical, for investors who cannot or will not buy the US dollar or who want to hedge the US dollar, gold's the best way to do it. Now, if you were in Venezuela, if you were in Argentina, if you're in Iran, obviously, Bitcoin is another way, but that's another story we'll talk about. But in terms of this, it's a good hedge against it. So gold has that value. It's an alternative risk situation. And in general, if you pick stocks well, and again, we give a good selection on our YouTube, I think you'll outperform it because if gold is going up, there are a number of good stocks that will outperform what gold will do. Although for many people, physical gold is fine. And then there's the issue of crypto. If I believe in stable coins, by the way, not in Bitcoin. I believe in stable coins. So the world economic.
So boring.
How boring?
I
like stable coins. But in any case, when the World Gold Council does it, because there are small gold stable coins, then I think we'll see gold a minimum of 2,500 to 3,000. Okay. Right now, that's not our view. But the point is that is something that's coming. Okay, there's a little more we have. That's my traditional views. Now, what is it worth?
Should I move it here on this one here?
Let me go over this in a little detail. I'm a cosmic value trader. That means to say I'm basically a fundamental person, but I use the astrology timing for investments. So when something's over fair value, I'm a little concerned. If it's under fair value, it's a different story. I think gold's worth a little bit, and this, by the way, changes almost every day. But my value of gold is just almost 2,000 now. And it's broken up in four parts. What is it as a commodity? And that's worth about $17.90. What is it as a currency? And this is constantly increasing now because of what they're doing with the dollar printing. So I expect to see that worth about $20.50 in a month or two. Or when they do the printing that you're talking about, it will go up. The inflation part is going up and down because we don't have the 8% inflation, but we certainly have a lot more than 3% inflation. So that number goes up. And the crisis metal was about 2,200. Now it's about 2,250. What does that mean? If there's a crisis tomorrow, gold could go immediately to 2,250 tomorrow. Right. Drop. If they say this, but this number is going up. And if you look at our numbers over the last 3 years, you'll see it was about 1925 and the 19th. This one's continually going up. So we're personally and recommend being long precious metals, both as an investment and a portfolio hedge. Silver, actually, we may lower this to about 25. Silver is more undervalued. We were buying it at 18 and 22. And basically it has support. It's got a lot of resistance rather between 24 and 26. Yep. So, but you have to remember silver is primarily only two drivers. One is as monetary, but the other is economics. And we're in a recession. I don't care what you call it. Yep. Or if you want to call it slowing or zero. I mean, we play inflation, games about statistics, but it's recessionary, if you like. Technically, we're really in a recession, but we're also with inflation, which is why we were stagflation light last year. And actually, we're in it lighter this year. So gold's moving up, but you certainly want to have some if you don't.
Gold moving up. I think silver, as you said, obviously, they're keeping it down with the paper. They're keeping the prices down with the paper. I think what they'll do is, and I know you're the one supposed to be making the predictions, but I think that they're gonna keep the prices down on these metals until they've acquired enough of them, and then they're gonna pop.
Well, I don't totally agree, and I'll tell you why. If you look at I'm a commodity. I was a CTA, and everything, oil, copper, not just silver and gold, has this 100-to-1 situation. It's not that I would used to be on the air and we would talk about when gold was 400 or 500, there'd be inflation. It would be 1,000, 1,500. The Fed doesn't care. I'm sorry, I don't buy that. It's basically, this is the way the futures markets work. And that's for all futures, lumber, you name it. The thing that's very ironic, and I mentioned that to you yesterday, is the fact gold and inflation. The way computers are set now, every time there's a whiff of inflation and the bonds move, the computers, the algos are selling gold $10, $20, $30. And yet, if you go into an audience who actually buys physical gold or buys gold stocks, one of the main reasons they're buying it is because of inflation. So it's a total disconnect. And that is going to change, I think, by May or June. But I don't think it's that conspiracy thing. I do think it's, most people don't care. Most of the traders don't care if it goes up or down. They just want to make money the easiest way. So It's not really a conspiracy as much as it's the way the commodities markets work by and large. But it is true. There is some manipulation. I don't want to say there is, but I think that's more from a trading viewpoint, and it could go the other way as well. I don't want to say the markets are totally fair and free. They're relatively so, but not totally.
It's relatively fair and free.
Right. I think we have to go back for a second.
Okay.
And then we'll cover this. I don't know if we're going to have time for more.
Yeah, this will probably be the last one.
Yeah, and basically, with an international gold-backed currency, which the BRICS may do at some point, then gold could be 4,000. Plus, you have the U.S. retail interest for the first time, always in Asia, always somewhat in Europe, in Switzerland, in Germany, people wanted to buy gold. But now you have it at Costco. Now you have it at Costco and Walmart, people buy. That's a whole new set of buyers.
It's a whole new set of buyers. And like you said, so Costco is now selling it. It was like one of their biggest things. Of course, we have our at Costmetal club, which is @costmetal.com, but that's retail, bringing it into retail people that never really bought gold or silver or anything like that, buying gold or silver. People are buying, they're buying gold and silver. I mean, when you go to the grocery store and your bill is double what it was a year ago,
I'm in shock. I'm always in shock. That's all.
Right? It's shocking.
Yeah, but do you know why the government doesn't? When we do inflation, they don't deal with energy or food. Do you know why?
Because it would be too bad.
No, you're in Washington. You should know this. If you're a Washington bureaucrat, everyone takes you out to lunch. You have a government limousine. So why would you be concerned with food or energy? It's not part of your lifestyle.
It's not part of your lifestyle. That's right. For the record now, these guys are not supposed to have anybody take them out to lunch. That's against the rules.
Okay, maybe my information is wrong about that.
No, of course it happens, but it is funny when you're in that deal and then you're not supposed, you're not supposed to. But of course, no, it's a dirty business. Washington's a dirty business. Of course, Henry thought I was in Texas yesterday, and then I told him I was here. I think we kind of had a laugh. The East Coast here between New York and DC, it's where everything runs out of. All the good and the bad gets decided here. Well, thank you very much, Henry, for coming on. It has been an absolute pleasure. I want to have you on again.
Sure.
It is really interesting. So that's afund.com to find him, as well as on YouTube, Henry Weingartner.
Weingarten.
I'm sorry.
Which means in German it's Weingarten or vineyard. And I also have a wine blog as well.
Oh, you do? Okay.
Yeah. afund.com/wine, in case you drink wine.
What is that?
That was completely awesome.
afund.com/wine.
All right, well, there you go, guys. Let's get some wine too. Thank you so much, Henry, for coming on.
My pleasure. Thank you for having me.
And thanks everybody for joining us. It's been an absolute pleasure. Again, we'll do it in the morning, and David and I will see you guys at 12 noon as well.
Thank you. Thank you, Bruce.
Your voice is powerful. When combined with social engagement, it's a force for change. Decentralized media paired with free speech is the catalyst for an empowered world and a unified, invaluable ecosystem. Join Global Boost, become a champion of free speech, and help to reshape the future of media.
Yeah,